Hey guys, welcome to the Hoan Zone, where we help you multiply the assets you own. Whether you came here from my single family versus multifamily video, or you're an investor just trying to figure out how to do this without any money, today I'm going to be going over a series on how to invest with low or no money. I'm going to be going over the ins and outs of how to invest without your money. And if you're new to the channel, please hit the subscribe button because I'm going to be releasing a brand new video every Monday and Wednesday helping you acquire more assets with less money. If it wasn't for low and no money strategies, I probably wouldn't be an investor today. I used a low money strategy when I first started out to buy my 6-unit apartment building, and I was able to refinance and have all of my money taken back out. So ultimately, I had no money in the deal. Fast forward to today, I still use these strategies. Most people think to themselves, I don't have any money, I can't get a bank loan. That's where I say, why not make the seller your bank? Huh? Exactly. If the seller doesn't have any debt, why don't you allow them to make the sale and interest? That's the kicker. You get to use the seller's money to fund your deal. Why this works? Oftentimes the seller doesn't need all or even any of the money from the sale. They just want to get rid of their problem property, get rid of the headache, and they're happy. This leaves you with the ability to make them an offer that they can't refuse. Before we figure out whether this strategy will work with them or not, you have to ask 3 important questions. Number 1, why are you selling the property? Number 2, do you have a mortgage? And then number 3, what are you going to do with the money once you sell the property? The first question will give you insights on their pain points and urgency for why they're selling the property. Are they living in the property and then going to move? Does the property need a lot of rehab, more than they want to handle? Or did they simply inherit the property and they don't want anything to do with it? Whatever the case, you have to figure out what their reason for selling the property is and then answer the number 1 question of all. What's in it for them? All too often, investors just think of themselves and what price they need to get the property for. A more advanced approach would be to think about the seller and what they need and what they desire. And what you might find out is that the seller is going to work with you despite getting higher offers from other buyers. I once met with a seller who contacted every person who ever sent her a postcard that said, "We buy houses." And when those people showed up, they immediately just started walking around the house and checking it out. When I showed up, I sat on the couch with her and talked to her about her dog. That whole time, we watched as dozens of investors came in and out of the house with their little clipboards and their measuring tape, and not once did anybody choose to greet her like a real human being. At the end of the day, everybody gave their bids on little pieces of paper, and she said, "I'll contact you all." I got the winning bid, even though there were offers that were thousands of dollars more than mine. It was all about the human experience. We as investors think it's all about the numbers, but really we have to remember that we are dealing with people and people are emotional. When it comes to question 2, whether they have a mortgage or not, that will determine whether they can sell or finance or not. I will cover that in depth in another video. The final question, what are you going to do with the money, will help guide what you're going to say to the homeowner. If they say, I'm going to use the money that I have from the sale of the house to buy another house in cash, then we might be screwed. But if they say, I'm going to take that money and throw it into savings, then we have a cleaner path to put our pitch out there. When you're in the negotiation phase with the seller might say, I want $100,000. Give it a second. Make it seem like you're thinking about it and say this, that's a fair offer. But instead of $100,000, how about I give you 110? Expect a puzzled look. They're expecting a lower offer. They're expecting a lowball offer, but never in a million years did they expect you to give more. Of course, you're gonna have to explain to them that you're gonna give it to them in monthly installments, but at the end, they're gonna walk away with $110,000 when you sell or refinance the property. If you do this over the course of 2 years, the math works out that you're getting this money at 5% interest. You see the 5% interest, they see the extra $10,000. You both have dollar signs in your eyes, and that's a win-win scenario. What were your thoughts as I described this scenario? Put your comments below. If you enjoyed this video, you're gonna love my private training courses. In my courses, I go in depth with what to say, how to handle objections, what documents you need, and so much more. You're gonna leave the course 10 times more confident, and you're gonna increase your likelihood of success dramatically. Simply go to hoanzone.com and see what trainings are coming up next. Thanks for being here at the Hoan Zone today. If you like this video, please hit the like button and share this with your friends, and I will see you in the next video.